this is Raman Gill. Welcome to episode 6 of the 10,000 Trades Show. This show is all about mastering trading and creating excellence based on deliberate practice and analysis of 10,000 trade setups. In this episode, we will take a look at a trade setup based on volume. I know there's no real volume in Forex trading because there's no central exchange like other markets. However, what we do have available to us is tick volume, and that can be quite a nice proxy for actual trading volume. So let's go on to the charts and take a look at how do we identify a trade setup based on volume, how do we enter this trade, and how do we take profits from this trade. Just a quick disclaimer before we get started. This is for educational purposes only. If you have questions about your individual investing needs, I recommend you talk to your investment advisor. Let's move on to the charts now. So today we are looking at pound US dollar here. This is trade setup from today. We saw that the price went up quite a bit. All in all, we had a move of about 250 pips. When we came to the market in the New York session, I was looking for the market to reverse at that point because we had a very large move to the upside, and really fundamentally there isn't a big reason that pound should be going up, especially taking into account the Brexit scenario and everything that has been going on in the markets lately. So with that view in mind, I was looking for a reversal. However, we have to wait for a reversal, and I'll walk you through how I took this trade today. So here we have our R2 level. So that's one of the things I was looking at. The price was going up and finally it got really close to R2 and we got a nice pin here. And then price just started to trade sideways. And today I would like to talk about using volume to find entries and exits in your trades. So here I was looking for a trade. This looked really nice. This looked nice. This looked nice. So basically price was hitting a wall here. It just had trouble breaking through this level. So from technical perspective, this is nice, especially when you get 3 rejections like that. This is nice setup. However, another thing I was looking at was volume. So when you look at this pin bar over here, we see in the bottom here, we see red volume come into the market. But then right away we see green. And the volume doesn't really start turning till we get to this pin bar right here. This is where we have volume that is red and we have a red candle. And the second volume bar here is red here as well. So this is where you can take your entry because at this point we are actually seeing some follow through in terms of volume. So all this whole time, our volume was mostly green. It started to turn neutral, which is good for us, which means that the price will either pull back or it will reverse. However, we started getting green volume again, and finally we saw some red volume and then neutral, and then the volume turned red on this candle. So we had a large red volume bar, which suggests that the sellers had actually stepped into the market. So looking at the volume helps you stay out of the trade. It helps you wait for your trade setup before you actually enter the trade. Another thing I was looking at was this indicator here. It's called on balance volume. This on balance volume, see how it was going up while the price is not going anywhere. It's just going sideways, but our on balance volume is climbing up. On balance volume basically means the new volume that is added to the previous volume. So overall, the buying volume was still going up, even though we had selling coming into the market. The on balance volume, which means the additional volume overall, was still to the buy side. And finally, when you take a look at this red candle here, second red candle here, and we have here the volume bar, which is quite high. And as you can see, the price actually broke through this channel here on the on balance volume. So what that means is that we actually had a red candle, which is good. The price wasn't able to break through this level here, 35.26 level. And then we got red candles here. Price was going sideways. And then we have a very
large volume bar, red volume bar, which suggests the selling volume. So for the last few bars, there was no green, there was no buying volume, it was just selling volume. And here, as we can see, the price had actually crossed down. It had broken to the up channel and it was actually pointing down. So those are the three things that I was looking to line up before taking a trade in this pair. So once we enter the trade, as you can see, all we have is red volume all the way through. Even though the price is not going anywhere, it's only going sideways, we see red volume and our on balance volume is moving down. So this tells us that even though we have price going sideways here, we still have sellers in the market. There are more sellers in the market than there are buyers, which helps us stay in the trade. And as you can see, price went down and our volume was still red here. And then finally, as the price starts going sideways here, the volume starts to decrease a lot, which means there's not enough selling interest left here. We did start getting some buying coming in. However, at this point, because the trade was going sideways, once you see the trade going sideways like this, the price is not moving anywhere, it's a good idea to get out of the trade. So overall, the entire price move was about 107 pips. And from our entry to exit, we had around 80 pips, around 82 pips. So the profit in this trade, if you're trading with one standard lot, would be $800.
I hope you enjoyed that trade setup. If you like this video, please feel free to share it with your friends. And don't forget to subscribe so that you get the latest episode for the show. Thank you so much for joining me today, and I look forward to seeing you on the next episode.